Hello and welcome to another fascinating episode of the Fintech Show, where we'll be looking into the topic everyone is talking about. We'll be speaking to voices from across the industry to get their thoughts on the eruption of AI in fintech and how they're using it to increase efficiency and, more importantly, add value. We spoke to Haytham Kaddoura from SmartStream during Money 2020 Europe and heard about how they're using AI in their products to help banks understand their capital and cash flows, which is ever more important with the recent regulations. He mentions how they can analyse vast swathes of data more efficiently than ever before, and as a result, remove more mundane tasks and leave it to the artificial intelligence. BBVA's dedicated initiative, AI Factory, is working on some incredible projects in this area using deep learning to tackle fraud risk. We heard from their head of analytics, Jesus Renero, about this and how they're using it to really balance innovation and regulation, just like SmartStream are. Adding further depth and insight to this conversation is Ranil Boteju from Lloyds, who heads up data analytics at the bank. And he assures us that AI can be used for good and explores the opportunities that it's also presenting his organization when it comes to improving their financial cash flow and also data insights into insurance as well going forward. Finally, we spoke to Nick Kerigan from Swift, who tackled on how they're using AI in the payment space, another touch point on how banks and payments organization are using AI to better manage their cash flow. Now, Swift have been innovating for some time, obviously, but he offers some interesting links between the ability to access richer data and the new developments in international payment rails. We hope you come away from this feeling really optimistic about the technology and what it's going to mean for financial institutions going forward. Thank you so much for watching and enjoy.
One of the things obviously that is a bit of a flagship product from your end is Air and the iterations of SmartStream Air.
Yeah.
And I think since we last spoke, AI has entered the mainstream very much so, thanks to the likes of ChatGPT and the like. Where have you seen some of the use cases and the renewed interest in things such as your AI solutions? How have you seen that moving forward?
I think within the foundations of what AI was built for in terms especially in the financial services industry, there hasn't been much of a negative trend like you've seen in the social circles, right? Because the premise of AI is making us do things much easier, much more simplistic, being able to really move the human element to a more strategic and intellectual and things that only humans can do, right? Removing the mundane aspect of a job, making sure when you're analyzing masses of data, which is practically has always been humanly impossible, right? This is where AI has historically stepped in and continues to evolve, and I don't see really any catalyst where this would really take a back step in this environment. For us, for example, if you look at areas of exception management and cash particularly, Air has been phenomenal at and has, I think yesterday made an announcement. We've made an announcement for Air and exception management. Really, how do you apply AI in understanding your cash flows? And if a payment comes in, if a payment is delayed, what are the repercussions within an institution, right? So on a treasurer's agenda today, or even a CEO's agenda, this should be way up, because with the current situation, the current cost of capital, the current interest rates, institutions cannot just take a major deposit in and not do anything with it and, again, tackle it in the morning. It's a costly proposition for an institution today, right? And if you also look at some of the new regulations coming in that space that also impact capital, although it's a quite a small deviation from your question, the new pressures on capital requirements and capital adequacy of institutions, right? Some institutions will need to shell up another 20% capital increase. That's a massive amount of money that cannot really be deployed, right? It's not money that they could be lending out. It's money that's going to be sitting there, and with the current situation of interest rates and the way they're going, financial institutions have to start covering that revenue opportunity for their shareholders and saying, all right, it is a capital reserve, but listen, we need to make sure we're enhancing our cost structures. We need to enhance our revenue structure. And that necessitates an instantaneous understanding of your cash situations and how your capital is deployed, where is it deployed, make sure that it comes in when it's supposed to come in. We're moving increasingly to the millisecond environment. I don't want to exaggerate it, but in the long term, I think this is really, institutions need to be quite super efficient in how their assets are deployed. And this is where something like AI comes and plays a phenomenal role, right?
Jesus, could you tell us how BBVA uses AI to reduce kind of risk and also look at fraudulent activities to help your customers out in this time?
Specifically for fraud, we work together with compliance and we experiment with alternative solutions to traditional models. We explore deep learning models to treat the landscape of movements and transactions on every specific customer like if they were images or things that the neural network is able to consider, right, or to model more effectively.
Yeah.
That is one area where we think that we are experimenting successfully on how to improve the current rates of fraud detection. And the other one is we think that all the customer behavior within the finance, in the finance movements and transactions and events within a bank move within a very specific area that is roughly predictable, right?
Yeah.
So what we do is to consider every transaction movement and events like a time series that roughly we can expect that something that will happen at a given period of time with a given likelihood, whatever, right? So in that area, what we try to do is to identify those things that we are not able to predict.
Yeah.
So instead of detecting fraudulent events, what we do is to work on what is the normal behavior, and whatever is out of that expected behavior is considered, we call it relevant fact. So this is relevant because we couldn't predict that, is out of what you are expected to do and the people like you are expected to do, and that is something that we flag and highlight or communicate to the customer or communicate to the bank to take a look.
Jesus, can you tell our viewers how you manage, because as you said, the industry and the technology, it's still not mature. How do you balance that need of innovation and also, regulatory compliance? It must be a fine line, right?
Yeah, definitely. We firmly believe that we need to bring what is a common practice in the digital industry, in some of the players that move in the digital area, inside to whatever we do with AI and machine learning inside the bank. We think that we need to bring experimentation and innovation in a way that is compatible with the regulatory framework, but we firmly believe that experimentation is the way to go with AI models and machine learning. We have created a cross group inside the AI Factory, which is coordinating every experimentation that we need to do to test, A/B test, whatever idea that we have that will face the final user, the customer, right?
Yeah.
And we need to work on that in a solid manner. So we specified a thorough methodology to work with, and we are trying to coordinate all the experiments so that we can check that our innovation and our ideas can cross-check with the reality, and we can bring valuable insights to the business so that we can move forward with those ideas. In that sense, innovation has to move together with experimentation, but we think that needs to move bottom up, in a sense that we don't have a dedicated team to innovation. We think that innovation should pop up like, okay, we identify from different programs that something is valuable and worth the time for experimenting with that, and we propose that idea, and if approved and agreed, we start experimenting and innovating with that. That's the way we understand innovation in this area.
Look, I mean, that's my kind of really fundamental belief is AI is not a threat to lots of jobs in banking. It's more the human that knows how to use AI. So the way that we think about these technologies is, have a human in the loop. How does it help that human do a much better job? And for me, that's basically the area of focus. There's lots of opportunities to remove a lot of the more repetitive tasks from people's lives and really get them to focus on where they add most value, but take some of the mundane stuff out of it. So the human plus AI is definitely the winning combo.
So one of the things obviously that banks focus on is it's all about mitigating and managing risk. How can AI and data-driven AI tools, how can that help a bank when it comes to its risk management?
Lots of different areas. So, starting with areas like how we manage credit risk. So we make lending decisions based on data, lots of opportunities for us to use, analytics techniques, modeling. Traditionally, we've used a lot of statistical models, but more and more we're starting to use some of the more advanced techniques to make better lending decisions around who we give money to. So making sure that our customers can afford those facilities and making sure we make the right decisions that are actually in our customers' best interest. So that's definitely one area. Other areas like how we manage fraud, right? So basically, there's always an arms race between fraudsters and banks, and machine learning and AI play a massive role there. So trawling through data for us to really identify where payments may be fraudulent. We can alert customers, we can identify customers where they're more susceptible, actually educate them about fraud. So fraud's another area where these techniques come into play. And then finally, there's areas like things like anti-money laundering. Again, lots of opportunities for us to really leverage the technologies, which our bank and many other banks have been doing so for probably more than a decade or so.
I want to talk about efficiency with AI. What processes can AI do to enable you to become a lot more efficient as a whole?
So there's a really big role that AI can play in basically automating lots of fairly mundane and manual tasks, right? So if you think about lots of parts of a banking process, you've got to have a human who looks at a screen, looks at documents, has to make decisions. And these are things where they're quite kind of consistent and structured and organized. And we can and do use various machine learning and AI techniques to automate this. So for example, processes like how we make underwriting decisions or how we look at sales quality, these are all processes where rather than having a human go through that, look through lots of documents, look at lots of screens and continuously make very similar decisions, they're very amenable to automation. So you can use algorithms, various machine learning techniques to actually automate that. So that is basically opportunity number one. And many banks have been doing this for about a decade, just using kind of the current sort of set of machine learning tools that have been around for a while. Obviously, in the last 6 months, there's been this whole large language model, generative AI sort of revolution. So I would expect to see much, much more of that. So, organize not just banks doing this at scale, but I think the gist is, how do you use these techniques to do a lot of the really repetitive, somewhat boring tasks and free up humans to do, right, you've trawled through all the manual work, whereas that you now need to actually take action and make sort of more complex decisions. So that's really freeing up humans to do some of the value add work, if that makes sense.
Absolutely, because it did seem that, again, 10, 20 years ago, you would, for, say, reconciling a huge underwriting or whatever it may be, you would have an army of people checking everything off, and now you can utilize AI tools.
Absolutely, yeah. So look, other areas, so for example, how insurance companies pay claims. So in the past, you'd have to send in a lot of documents. A claims assessor would need to go through those, read them all, review the policies, and then make a manual decision. For now, probably a decade, lots of insurance companies all over the world have actually automated that. They've used, vision document AI to scan these, review them, and actually make those decisions where it's kind of low risk. So that's an example of something that's been up and running for a while. Similarly with credit risk, all of the documents would go to a credit risk officer who would review them all and then make a manual decision. Models have been doing this for like 20 or 30 years now. So there's already lots of areas where, banks have been leveraging analytics, models, machine learning, and AI for a while. Expect to see a lot more of it as the technology's sort of supercharged over the last few years.
I mean, it really is there's another technology that really seems to be dovetailing into payments at the same time, whether it be on the reconciliation side of things or on the value add, as you've just mentioned there, and that's the use of artificial intelligence. How is that technology as well going to revolutionize payments in the next couple of years too?
Well, we're very passionate about artificial intelligence. Obviously, it's now, this year with all of the sort of buzz around ChatGPT suddenly become high on people's agenda. We've actually been working on the use of machine learning and AI in payments for several years, and actually, putting really hard work into developing a highly scaled platform. So we've worked with a company called C3.ai, Tom Siebel's company, alongside Red Hat Linux, to develop a platform for AI that can enable us to analyze the vast quantity of data that we see across the SWIFT network. The trillions of transactions that go across every day, and therefore use that data that's not our data, it belongs to our clients, but use that data to be able to detect anomalies in the payments, and therefore play back the intelligence of that to those banks, which could enable them to have the better detection of things, like fraud, money laundering, sanctions, all of those important topics that the industry is trying to solve. So I think there's incredible potential here for the use of AI in payments, and we're sort of kind of still early on in that journey.
But I think it's absolutely brilliant. It's not just a customer experience change, it's going to be a revolution on the back end too. Right. Imagine a talent play as well, right?
Yeah, absolutely. I think we'll start to see the use of AI kind of much more broadly with people in their work environments, right? In addition to being purely the preserve of data scientists. And so yes, I think AI is going to be a pretty powerful trend in payments. I think the other thing I'd say about AI though is to deploy AI successfully, you need to have kind of beautiful data, and to be able to analyze that data in large volumes. So the change that we've seen with the introduction now of the ISO 20022 payments standard. So in March, we went live with a coexistence period for cross-border payments of ISO 20022. And what that brings is the potential for richer, more structured data in payments. And so as that kind of, that gets adopted and used as a standard, you can see the potential for that structured data, therefore, to really help fuel the use of AI and machine learning, because you'll have much better data, richer data to work from.
Exactly. And having the ability inherently in the organization to analyze thousands and thousands of data points as the markets move across the globe, right? And I was talked to our head of AI a couple of days ago, and I mean this drive towards faster ability to process ever increasing amounts, volumes of data, has always been a priority in the last 2 years, but now it's even moving quite significantly higher. I mean it's really quantum leaps as opposed to a natural growth. And I was talking to Andy, you know Andy actually, yeah. And we're processing hundreds of millions of records of data in minutes.
On that note, we've seen the likes of ChatGPT, Midjourney really enter the general public consciousness, and part of the reason for that is it's very accessible for them to access. One of the things that I've always been impressed about with SmartStream Air is the fact that you can link this into something as simple as an Excel. What's been the response of that? Because it's not, it's a very technically advanced product, but it's not very technical to deploy by comparison. What's been the customer response to this?
I mean, the industry is definitely moving towards a low code, no code. A lot of the discussion with clients, they want to move away control from their tech departments to their business users community. Again, in an effort to expedite decision making, right? And Air is really a low code, no code environment. So it depends on the complexity of the task you want to do. And users are quite comfortable in running that and analyzing the data coming through. And the flexibility it provides in allowing institutions to look at, say, hundreds of fields of data and really narrowing down and filtering what they need is second to none in our industry today. And this is coming repeatedly from tier one institutions and non-conventional sectors. So look, we're working with corporates, we're working with players in the insurance sector. So not only banks today that are looking at how do they best use the data they have.
Absolutely amazing. Now, it couldn't be an AI interview without looking at generative AI and the language models around that. You know, what's BBVA AI Factory doing in that regard?
We think that there is a tremendous potential for that, but we also think that the technology is not mature enough.
Right. Yeah.
So we are specifically researching on the guard, I don't know how to pronounce that, it's guardrails or how to keep that generative in AI within specific limits, because we don't want hallucination with our customers or whatever reason. We in BBVA believe that technology is useful and we need to explore that. And in that sense, we are working on understanding what is the full potential. We actually believe that our portfolio of models in 3 years' time will have a significant impact on the number of models that will be based on LLMs and this type of technology, definitely.
We're looking at predictive models. What does that mean for banking efficiency? Because I know we can say like a lot of if this, then that kind of models. I get that. That's perfect for, again, things like reconciliations. But this generative AI, where can that be used in a bank? Where have you looked at using it, and where has it been quite effective, and where has it been actually this was a good experiment, but actually we're not going to touch that?
So, I mean, there's been a lot of, I guess, hype around how, you know, you could build customer-facing applications with generative AI. Those are all very exciting. I'm actually more excited about how these techniques can be used for back office and for processing. So I'm the Chief Data and Analytics Officer. One of the things that my team has to do is understand data, right? So when we load data into one of our platforms, there's lots of work to really try and label it, try and understand it, to understand the metadata. Often it's incomplete, very, very manual. The promise of generative AI is to actually automate a lot of that. So using, kind of AI techniques, actually, kind of force multiply humans. So actually do the work of a human, but, much more rapidly. So that's a really good example of an efficiency gain, right? So rather than something that's customer facing, loads of other operational processes are, very repetitive and manual. So things like sales quality. So if you kind of rewind 5-10 years ago, basically there were sales quality assessors at banks who had to go through a small sample and basically make determinants, judgments based on that. With the generative AI capabilities, you can actually load the data in, run some algorithms, and actually do it on the whole population. So these are 3 or 4 areas where not only do you get a significant efficiency gain, but also it means you can do it a lot more effectively, as well as free up the colleague to do the value add work and actually take out the really boring tasks. So very exciting opportunities around that.
What's the opportunity then for the colleagues within that say particular business process? What does it enable them to become more efficient with and be able to do?
Sure. So if you think about someone's role, there's parts where you really adding value. It's where you're using your insight, intellect to actually come up with a decision or take some actions. But to get to that, you've got to do a lot of manual work. The promise of AI is actually the manual work reduces significantly, so you can focus more of your time on that really high order kind of value adding work. So it should mean that people have much more interesting and exciting roles, and a lot of the mundane repetitive stuff gets taken out.
That's all we've got time for on today's episode of the Fintech Show. I hope you've enjoyed it so much. I know I have. This topic is on the top of everyone's lips. So if you want to catch more, you can see the rest of the series and so much more over at ffnews.com. Of course, YouTube, but especially LinkedIn, where you'll see me, Doug McKenzie, in the comments.